Hi, I'm Wal Galbraith. I'm a part of the Ray White South Coast Group, and this is your South Coast Snapshot for week 48, 2022. The snapshot is designed to give you a bite-sized breakdown of the real estate market overall, including local, regional and city-based information across Australia. All information is sourced from the AFR, leading economists on Twitter and the Sydney Morning Herald. All information is relevant to buyers, property owners or both. Australian house prices are still extraordinarily high. Short of a spectacular new global financial shock or major recession, they are likely to remain so. While expensive rents are surging and rental vacancies remain at very low rates. The fundamental problem is Australia has never built enough homes to match population growth. With immigration levels rising again, that affordability and availability gap only becomes more acute, particularly for those who can least afford it. House prices in Byron Bay have plummeted by 15% in the last 12 months, and further falls are on the way as rapid interest rate rises and weak sentiment hit the more expensive regional markets harder, data from CoreLogic shows. Prices in popular lifestyle markets such as Ballina and Tweed in regional New South Wales and in Baw in regional Victoria also fell sharply in the past year, dropping by 9.1%, 4.2% and 4.8% respectively. CoreLogic Head of Research Eliza Owen said the downturn initially seen across the more expensive capital city areas had spread to the regional markets. Unlike the capital city markets, regional housing markets have suffered ongoing extreme weather events, which have compounded the impact of rising rates on housing demand. Values have a long way to fall before their pandemic gains are eased, according to CoreLogic data. Between March 2020 and their peaks, Ballina house prices soared by 58%, Byron Bay by 56.5% and Tweed by 41.4%. Governor Philip Lowe has conceded the obvious lesson that using a crystal ball to prognosticate on interest rates beyond the immediate future was a bad idea and is unlikely to be resorted to again. The mea culpa over the self-described considerable reputational damage suffered from the Reserve Bank of Australia's mistaken 2024 interest rate guidance will be of little comfort to the millions of variable rate borrowers who have experienced an almost 3 percentage point increase in their mortgage rates since May and are bracing for further increases. The financial pain will be delayed for about half of borrowers who took out multi-year fixed rate loans at rates as cheap as 2% or less. But the approximately $500 billion worth of fixed rate loans are now gradually expiring and converting to higher interest loans. Employment grew by 32,200 in October, driving unemployment to 3.4%. The equal lowest rate in almost 50 years, according to the latest jobs data from the Australian Bureau of Statistics. The result was well ahead of consensus for 15,000 new employed people and a jobless rate steady at 3.5%, adding further impetus for the Reserve Bank of Australia to lift interest rates in December and beyond. Housing declines will bottom out in June next year with an average year-on-year fall across the capital cities of 15% before the market improves as a collective increase in wages dents the effect of higher borrowing costs, a new report from Deutsche Bank states. Housing affordability has worsened as a result of the Reserve Bank of Australia's 7 interest rate increases that have lifted the benchmark lending rate from a record low of 0.1% to 2.85%. Making for a 22% cut in purchasing power, the Australian arm of the investment bank says. The hit to affordability has been sharp. Deutsche Bank's newly created Housing Affordability Index shows that a buyer on average weekly earnings of $1,769 on the most recent figures with a 20% deposit could have afforded to spend $508,000 on a home in April. But by November, that figure has already dropped to $398,000. Home loan payments will jump to the highest on record as rising interest rates and high debt put pressure on household budgets. Economists expect the rising mortgage payment burden and falling house prices to cause consumers to cut spending to help cool inflation next year. The Reserve Bank of Australia data show interest and principal payments as a share of household disposable income are already around the previous high recorded in 2010. A new high will be set if the Reserve Bank raises interest rates in December, as is widely expected by market economists and money market traders. Commonwealth Bank of Australia economist Gareth Aird said an RBA cash rate of about 3% would push up required mortgage repayments as a share of household income to a record high. We're gearing up for our Ray White South Coast January auction event. 50 properties, one day, January 2023. A perfect time to make use of the summer market and capture those buyers under one umbrella. Want to know more? Reply to this email or give me a call. Looking to make the best use of the current market? If you're either expanding your property portfolio or looking to sell your current property, get in touch today. We would love to help. I'm Wal Galbraith with the Ray White South Coast Group, and that was your South Coast Snapshot for week 48, 2022. Catch you all next week. Be well.